Bloomberg Audio Studios. Podcasts, radio, news.
Shares of the green hydrogen company Plug Power closed 2.5% lower last Tuesday. That was the first day of trading after the company reported net revenue for the second quarter that came in above estimates. But the bottom line was the issue. EPS missed the average analyst estimate. Plug provides hydrogen products, including electrolyzers, hydrogen transport, storage, and dispensing solutions, and more, to a variety of customers, including Walmart, Amazon, Home Depot, Airbus, AT&T, Kroger, FedEx, PG&E, Coca-Cola, and more. We've got back with us Andy Marsh, the CEO of Plug Power. He joins us from just outside of Albany. Andy, always good to have you on the program. I want to start with your customers. I mentioned just about 10 of them. The list goes on. What are you hearing from them in a world where green energy is no longer sort of the buzz phrase, the buzzword? There's not the same government incentives for this stuff that there was in the last administration. What are you hearing from them right now?
So the last part of that, Tim's not true. The incentives for 48E, which is the tax credit for fuel cells, in the last bill is actually much better than it was.
Well, I was talking about green energy as sort of a monolith, just to be clear.
Yeah. So when I look at it, first globally, the incentives for hydrogen and fuel cells and green energy remains robust. And if you look at our business in the second quarter, our revenue in Europe for electrolyzers, and all of it's really primarily Europe, actually tripled to $45 million from what it was a year ago. And here in the United States, when we look at the tax landscape, the credit landscape, we actually see it better today than it was a year ago. So
why is that then?
Really happy with, well, I think because when you looked at the tax credit for fuel cells, it was, not well structured or positioned in 48E. And we see an extension of what was essentially the ITC, which was extended the last time under President Trump in 2018, in the latest bill, which extends a credit for fuel cells, which is used by Amazon, Walmart, and many of the customers you mentioned through 2032. So we're actually pretty thrilled with what happened for hydrogen, especially in the last bill.
When you look at Plug Power's earnings, the margins are still negative, but they have improved from the last year. What are your thoughts on just how much more runway you guys need before Plug Power is consistently profitable?
Yeah. So, I think you hit on the point. We moved gross margins from a year ago by over 60%, and we are targeting to be gross margin zero by the fourth quarter. And there's a clear map with our hydrogen plants and the improvements we've seen in service, and more importantly, selling more. And that really helps us a great deal. And we're targeting being EBITDA positive by the end of next year. And I think with our Project Quantum Leap, where we really focus on cost and selling, that we are on the right track. And I think you're beginning to see it in the financials. Even the miss on EPS was write-downs, which were non-cash write-downs associated with our plans to really align the business for the future to be successful.
What's the U.S. market right now for green hydrogen? That's hydrogen made from water using clean electricity to power the electrolysis process.
So, to be straight, it is a bit slower than what you see in Europe and other places. Our primary focus for electrolyzers are really Europe, Australia, where the climate's right. But we actually operate the largest green hydrogen, liquid hydrogen plant in the world at the moment in Georgia. And when I reviewed this morning our demand for hydrogen from the second quarter to the fourth quarter, we actually see that our daily usage go up from 55 tons per day to about 67 tons per day by the end of the year. So we're using our plants. We're creating green hydrogen. We're involved in some blue hydrogen projects. So we feel comfortable about the long-term trajectory and even near-term trajectory for hydrogen in the United States.
Talk a little bit more about that demand and where it's coming from. Are you seeing customers, pivoting from other sources of energy, or are you seeing, just increasing need for more sources of energy, and that's what's really driving your growth here?
That's actually a real good question, because when we look at the world, the United States, with what we've deployed already, that's 275 sites in our material handling business across the U.S., we've actually taken off the grid approximately 500 megawatts of electricity. And as I think everybody knows, it has become more and more challenging to bring electricity there's over a 3.5 year backlog to get electricity to facilities. Typical distribution center, we take off 2 to 3 megawatt off the grid, which can then be used for things like increasing freezer capabilities. So if you're a food retailer and you want to sell more frozen goods, which is a growth area, one way you can increase the size of your freezer and not have to worry about the power needs is actually use fuel cells and hydrogen from Plug Power.
We're speaking with Andy Marsh, the CEO of Plug Power, joining us from just outside of Albany. Andy, I want to go back to regulatory issues, tax credits, and that sort of thing, because you did say that demand is better, or we were in a better position than you were a year ago. Our own Will Wade and team reporting that a year ago, credits were expected to help lead about 1.2 million metric tons of annual green hydrogen production by 2030. That's according to BNEF, our in-house Bloomberg New Energy Finance. Now, projects with just 150,000 tons of production capacity are expected to qualify for the incentives, dramatically reducing anticipated U.S. output. This is after the Trump administration's tax and spending legislation significantly limited tax credits to produce the fuel. How is that affecting you?
Well, when I look at, I'm already using the tax credits. We expect to have online our additional Texas plant by 2028 before they expire, which allows us to use those credits through 2032. I think when we look at our own needs, we're looking at other expansion opportunities. We think that we'll be able to generate the hydrogen to meet our customers' needs and be able to take tax credits through 2032. So, quite honestly, I'm very comfortable with the present legislation.
Back in January, there was a Bloomberg News story about the White House confirming a $1.6 billion loan guarantee for Plug Power to build hydrogen plants. How have you guys received that loan yet, and how crucial is support like that to continue to grow Plug Power?
It's important, but it's not. We will still move ahead with building plants. Ultimately, we're focused, and I've been down to the DOE recently, and we're working on details to make sure we can pull down funding for the plant in Texas, which is a plant that gets very, very low cost electric energy from a NextEra wind farm. When we take a look at that, we're working through the final details to start being able to pull down funding from the DOE. I know they've canceled many projects. We haven't been on the cancel list, and we have a good relationship. I think the Trump administration and their goals of being energy dominant, the world's going to want green SAF. The world's going to want green ammonia. The U.S. is well positioned to be the leader in providing those fuels, and green hydrogen is critical to becoming energy dominant for the long term. Additionally, hydrogen generation is really important for national security. I mean, next to SpaceX, all the vehicles use hydrogen. So we really think about the long-term benefits. And then on top of that, when you think about hydrogen, over 30% of retail food move through a Plug Power fuel cells. Boy, you don't want that disrupted overnight.
No, you don't. Andy, we only have about a minute and a half left, and I want to talk about the stock price. It's down about 97% since the 2021 highs. even though you're a relatively small company, you're still among, at least today, the most actively traded stocks with $54.7 million shares rather, trading today. It's massive. The volume this year has been massive. You've got 28% of your shares floated. What's your message to investors and traders right now?
Well, I think I would tell them it's a great opportunity to come in. You can look at the financials, revenue growing at 20%, gross margin improving dramatically. The deployments in Europe, where the electrolyzer industry is really happening today, has tripled in the past year. I think this is the opportunity to successfully enter the stock. And it's one of the reasons our CFO has made significant investments, and I'm putting about 25% of my salary to work buying stock, actually 50% of my salary to work buying stock every week.
Andy, thanks for coming on. Appreciate you taking the time this afternoon. Always good to check in with you, and it has been quite a few months since we last spoke, so don't be a stranger. Come back soon. Andy Marsh, CEO of Plug Power, joining us from just outside of Albany.